And let's talk about this should be a fun one. Let's talk about WWE, World Wrestling Entertainment. This is a fun stock. Todd, do you own this in your portfolio?
I do. I am long WWE.
Yeah.
I'm up a nice amount of it now that it finally broke out.
So
Um,
here's the chart, folks. Yeah, just out absolutely massive blowout volume here on what day was this, Todd?
like 3 days ago, yeah. So
Tuesday? Yeah.
yeah, Tuesday, and
Yeah.
then, that's the whole meme thing again, right, Joe? I mean, we've seen these memes. I get a hold of it, and these things get, there's a lot of short interest in World Wrestling Entertainment.
Yep.
10 days to cover short. And if you stop sharing, Joe, I will go over
Sure.
and share my screen so I can pull up something else that I wanted to show our listeners on WWE. But I mean, really, Joe, this is, I have never, since Hulk Hogan retired, I have been much of a WD follower. I don't follow it closely, but, I do appreciate the fact that, we're talking about entertainment. And importantly, we're talking about entertainment that can be consumed not just through pay-per-view or whatever, but live.
That's right.
And
A
that is
COVID
something,
reopening
yes,
play, as we've mentioned before.
absolutely. And I think that, really that's the impetus or whatever for why this stock, it has caught a lot of people's attention, but it's also why so many people were short this thing and are still short it because of the assumption, that their business is going to be in trouble because they can't do their live performances and they can't leverage that for money. And we are at, Joe, 9.9 days to cover held short. 10 days of average daily volume it would take for all the people who are short WWE to get to cover their positions and be long. Usually we reward in our research model, free trial below, in our research score, we reward 5 days or more. So 10 days is a lot. 10 days is a lot. But this checks marks a lot of businesses, a lot of the things I like to look for in a company, especially on the earnings side. Because again, with the COVID reopening plays, kind of stupid, right, Joe, to think about what the current revenue is versus a year ago. I mean, it's like, it's not, yes, it's down. I mean, because businesses were closing in the first quarter of 2020 and now they're reopening. So, I mean, the business is going to be lower. But, Joe, as we get a few more quarters in, now you're going to be having numbers from reopening leveraged against very low, easy comparisons from those quarters where nothing was happening.
Right. Look at that EPS though. That's strange to me.
Well, I think about it. They remain profitable in
Yeah.
2020, $1.66. Fiscal 2021, $1.69, so flatlining. And then 2022 expected to grow 31%. So, and I mean, really, the year over year down 9% in the first quarter, much better than the prior quarter, which was down 26% year over year. So there's a stair-step pattern here towards this reopening play for WWE. And there's optionality here theoretically because of things like non-fungible tokens, right? The ability to take all of this fantastic content that WWE has, as far as merchandising and everything else opportunities, and be able to now maybe leverage that into an entire new brand of digital collectibles is kind of exciting and could be causing a little bit of spark and interest as well.
Absolutely. Yeah. Just curious, Todd, because I'm actually interested in potentially adding this one to my personal portfolio. What would you approximately, not because I know you're not a huge fan of specific entry points, but approximately what would you be looking for an entry point there?
All right, so of course you asked me the question just after I closed the chart, right?
Sorry.
So let's go back to the chart again. I'll reopen that for our
Thank you.
listeners and viewers so they can see that. So I mean, obviously, I accumulate down here in the mid 50 range. You got this bust out, which has now created a gap on Tuesday. Gaps don't have to fill, Joe, but as we've said on the show before, they often fill. So you can see us partially filling the gap today, down 4.5%. You can see this prior support here at 60 and 61.32. And then if you kind of draw this, hover this line over, that gets me to about 58, 59 would be a really good fill of the gap. You don't have to fill the gap the whole way though. And I wouldn't get too cute with it, Joe, because then you miss the opportunity of buying it.
Right.
So typically speaking, when I get a 5% down day in a stock I've been watching and everything else check marks my boxes, I usually take advantage of that. And I usually buy into the close in the final 15 minutes. That way I reduce the risk that maybe someone big out there has been sitting on their shares trying to unload them all throughout the day, but hasn't been able to. And then finally at the end of the day has to puke them out to the market and knock things down to their low of the day. So I tend to wait until the last 15 minutes or so of the day to hopefully insulate myself against a little of that intraday risk. So yeah, no, I think that if you haven't bought it and this check marks box, for, you like it and you think, I mean, this is not a bad entry.
All right. Yeah. Well, I'm definitely going to keep an eye on the chart for the rest of the day, and yeah, I might try to might see if it drops down to 61 even, and even if it doesn't, I still might open a small position in it. So I'll keep you all posted.